All three charts read bearish. S&P 500 bearish. Nasdaq 100 bearish. Bitcoin bearish. If you stop there, you think the setup is identical across the board. Sell everything, go to cash, wait. But that's exactly the mistake most traders make. They read the label and ignore the structure underneath. Because when I look at the actual volume data, the confluence scores, the compression readings, the divergence signals, these three charts are telling completely different stories. The S&P 500 has a bullish swing type inside a bearish bias. That's a contradiction the terminal is flagging. The Nasdaq has a confluence score of 2. That's the weakest institutional interest of anything on the dashboard. And Bitcoin, it just printed something that I almost never see. A triple strong divergence cluster with volume compression at 100% coiled. It's the same regime label, but it's three very different setups. Let me show you how the volume structure is actually saying. A quick framework note for anyone who's new to the channel. The three layers to every analysis. First, we have the AVAP. This is the blue line. Is price above or below the anchored volume weighted average price? Above means institutions are in profit. They defend every dip. Below means they are underwater. They sell rallies. One metric and a massive signal. Second, we have the confluence score on the right side here. This is my proprietary system that quantifies how many volume factors are aligned. A score of 2 means almost nothing is confirming the move. A score of 8 means nearly every volume metric is pointing the same direction. The number matters more than the label. And third, we have the Cantaloupe flow sequence. When new money enters the economy, it flows in order. Liquidity first, then bonds, then equities, then risk assets. Right now, all three charts show same Cantaloupe reading. It shows accumulation. Liquidity is bullish. Equities and risk are bearish. The macro bonus is +2 across the board. Composite score is +3 out of 9 with liquidity leading. That tells me conditions are improving at the source. The question is, which downstream asset will the flow reach first? So let's look at S&P. Right now, S&P is trading at 6,842. And this is the most interesting chart of the three because the terminal is showing an internal contradiction. Look at the reading. We have a bearish bias, but we have a swing type that is bullish. That's the terminal telling you that the regime level assessment is bearish, but the current swing structure has bullish characteristics. Price is below the AVAP, the blue line you see here, but only 0.6%. That's nothing compared to Bitcoin and Nasdaq. The AVAP deviation of 0.6% means that S&P is sitting right at its institutional cost basis. It's not deeply underwater, it's contested. We have a confluence score of 3. It's low, but it's higher than the Nasdaq. Stability is 0 out of 2. The volume profile hasn't consolidated yet. Volume compression is expanded at 24%, meaning we've had a volatile move, but it's starting to compress. It's not fully coiled yet, but it's compressing. Now look at these signals. You can see a strong divergence. That's the terminal detecting that volume behavior is diverging from price behavior. When price drops but volume structure doesn't confirm the breakdown, that's institutional absorption. Someone is buying what retail is selling. The convergence status, it reads 24%. That's significant. It means the volume profile and the price structure are 24% out of alignment. In my experience, divergence readings above 20% and they resolve in the direction the volume is pointing, not the direction price is pointing. So here's the macro context. Last CPI, it came in 2.4% year over year, below the 2.5% consensus. Monthly at 0.2% versus 0.3% expected. The core CPI at 2.5%, lowest since April 2021. That's genuinely positive for the rate cut trajectory. But the S&P still dropped 1.4% on the week because the AI disruption narrative dominated everything. 2 trillion wiped from software market caps, Salesforce, ServiceNow, Thomson Reuters, all down 25 to 33% year to date. The volume structure is telling me the macro is improving. The AI rotation is creating selling pressure, but institutional money is absorbing that selling near the AVAP. The bullish swing type inside a bearish bias means the terminal sees the conditions for a regime flip forming. It just hasn't confirmed it yet. So what I'm watching, a sustained close above the AVAP. If price reclaims that blue line and holds, the bias flips from bearish to bullish. And given we are only 1.6% away from that, that's a very short distance. That could resolve within days. One strong session could do it. The S&P is the closest of these three instruments for a change. Now let's look at Nasdaq. Right now trading at 24,665. And this is the weakest chart of the three, not even close. The confluence score is 2. That's the lowest reading across everything I track right now. A score of 2 means almost no volume factors are confirming institutional interest at these levels. The market is moving on narrative, not on positioning. The bias is bearish. The swing type is bear. Unlike the S&P, there's no contradiction here. The terminal reads bearish at every level. Swing age is 447. This bearish swing has been running for a long time. That's maturity, which matters because old swings eventually exhausts. But 0 out of 2 stability tells me the exhaustion hasn't started yet. VWAP deviation is negative 2.6%. Price is 2% below the institutional cost basis and the AVAP is declining, meaning institutions keep resetting their reference point lower. That's active distribution, not passive holding. The volume compression expanded to 58%. This is key. The Nasdaq is in high volatility post-move phase. But unlike Bitcoin, it hasn't compressed into a call yet. Expanded 58% means we are partway through the volatility cycle. There's more to go before energy compresses enough for the next directional resolution. So here's a critical difference between S&P and the Nasdaq right now. The S&P has a bullish swing type with 29% divergence and only 0.6 below AVAP. It's fighting to flip. The Nasdaq has a bearish swing type with 0% divergence and 2% below the declining AVAP, 2.6 right now. It's not fighting anything, it's just trending. The AI disruption rotation is concentrated in the Nasdaq because this is where the software, the mega cap tech names live. The 2 trillion software wipeout, the 1.5 trillion loss from Magnificent 7, that's all Nasdaq weighted. The S&P's broader sector composition provides a buffer. Consumer staples, utilities, healthcare, those are absorbing rotational flow. So my stance on the Nasdaq is this is a sell rallies environment until the confluence score starts climbing. A move from 2 towards 4 or 5 would indicate institutional re-engagement. Until then, every bounce into the AVAP is a distribution opportunity. Do not catch this knife. Okay, let's look at Bitcoin. And this is where it gets really, really interesting. Bitcoin is right now trading at 68,257. It's down 44% from the October all-time high at 126,000. 4 consecutive negative weeks. Everything about the regime reads bearish. But the volume structure underneath is telling a completely different story from the Nasdaq. Look at the dashboard. See these numbers. Confluence score is right now 11. Compare that to the Nasdaq's 2. On the surface, both are bearish. Underneath, one has near maximum institutional volume alignment and the other has almost none. We have the bearish bias. We have the bearish swing type. we have a VWAP deviation of 7%. All of that confirms a bearish regime. But look at the volume compression. It's coiled 100%. This is the single most important reading on this entire dashboard. Coiled 100% means volume has compressed to maximum density. All the energy from the sell-off, the distribution, the liquidations, the panic has been absorbed into a compressed spring. This doesn't tell you direction. It tells you the magnitude. When this resolves, the move will be significant. In my previous video, I noted that Bitcoin was in an expanded volatility phase. That has now fully compressed. The transition from expanded to coiled 100% happened while price consolidated between 67,000 and 72,000. We also have this triple strong deviation. That means on 3 separate occasions, price made new lows or tested lows while volume behavior diverged bullishly. Institutions were absorbing at the lows, not distributing. This is the same pattern the terminal identified before previous major reversals. Strong divergent clusters at depressed prices with volume compression building. Now, an important note is it doesn't mean the bottom is in. It means the conditions for a reversal are forming. The Cantillon context here is critical. Bitcoin sits at the extreme end of the flow sequence. Liquidity bullish, equity bearish, risks bearish. The macro bonus of +2 confirms upstream conditions are improving. CPI at 2.4%. Rate cut expectations moving forward. But Bitcoin needs equities to stabilize before it receives flow. And equities need the AI narrative to exhaust. So you have this fascinating setup. Bitcoin's eternal structure is the most constructive of the 3 charts. It's coiled 100%. Confluence is at 11. Triple strong divergence. But its macro positioning in the Cantillon sequence means it's least in line for the capital flow. So right now I'm watching the 72,500 zone. You can see the resistance area and the previous day higher level right here. Above that, you have potential regime shift at the AVAP. But below 67,000, the zone where the strong divergence signals they fired, that's structural support. A break below 67,000 negates the divergent signals and opens up for 64 to 60,000 again. Between 67 and 72,500, Bitcoin is coiled. The spring is loaded. The question isn't if this resolves, it is which direction and when. And the Cantillon framework says not until upstream flow arrives. So let me pull all this together because this is where the framework earns its value. 3 instruments, all 3 read bearish. Same Cantillon flow, accumulation. Same macro bonus +2. Same leader, liquidity. Same transition, stable. The macro picture is identical, but the volume structure underneath is completely different. S&P 500, confluence at 3, bull swing inside a bearish bias, 28% diverged, but only 0.6 below AVAP. This is the closest to a regime flip. One strong session could reclaim the AVAP and change everything. The AI rotation is creating selling pressure, but institutions are absorbing it. Nasdaq 100, confluence score is 2. The bias is bearish. We have a bearish swing type. We have 0% diverged, 2.7 below AVAP. This is the weakest chart. The AI disruption repricing is systematic and ongoing. No exhaustion signals yet. Sell rallies until confluence scores approves. And then we have Bitcoin. The confluence score is at 9. It went from 11 to 9 while I was recording. But we have a bear regime. It's coiled 199% with a strong divergence at the low. This is the most loaded chart. The spring is compressed to a maximum, but it sits at the end of the Cantillon sequence and it needs equity to stabilize first. The flow sequence tells you the order of the operations. Liquidity improves, that's happening. Equity stabilize, the S&P is close, and the Nasdaq is not. Risk assets recover. Bitcoin's volume structure is ready, but the macro trigger hasn't arrived yet. That's why I don't predict. I identify regimes. I read the volume structure, and I wait for confirmation. The terminal tells me when, not before. Regime first, volume second, price last. So this is the kind of analysis I do every single day across every instrument on this dashboard. Specific levels, regime identification, volume structure, no prediction, just reading what institutions are actually doing with the capital. If this framework changes how you see what's happening in the market, I publish daily institutional volume brief on Substack every morning. The link is in the description. I also release elite research reports. I did one on Tesla, and tomorrow I have a full convergence analysis on Coinbase, which ties directly into Bitcoin and Cantaloupe analysis you just watched. If you want to see how this framework works on individual equities, that report is available to subscribers tomorrow. And the terminal indicator, everything you have been looking at on the screen, it's available for you on TradingView. The link is in the description. Subscribe to my Substack, everything will be included. So, subscribe to this channel if this approach resonates, and I'll see you in the next one. Take care and trade safe. Bye bye.